Hello and thanks for joining us at interest.co.nz. I'm Janae Tibb-Shirani and today I'm joined by Climate Change Minister James Shaw. Local Government New Zealand has today released a report that details the cost of sea level rise. It says that if seas rise by a metre, it'll cost $5 billion to local government. That's how much it would cost to replace that infrastructure. If it rose by 3 metres, the cost would be $14 billion. Now, Local Government New Zealand is saying that councils need central government support to pay for this sort of thing. How involved is central government willing to get in these sorts of issues?
We're very involved, and the report that Local Government New Zealand have put out is very consistent with a report that I released at the beginning of last year from the Climate Change Adaptation Technical Working Group, which had some other very large numbers in them around private property and central government infrastructure. So the LGNZ report's a really useful contribution to that. And the work that we're doing this year will give us, a much more sophisticated view of what's at risk, when is it likely to be at risk, and how do you pay for it?
Sure, okay, because these figures are what they are now, but climate change is happening, but seas might not actually rise by 3 metres tomorrow, for example. So you're saying we need to get the information, and that's the phase that we're in now? Yeah,
that's right. So, actually the LGNZ report says this, that we have about a 25-year window. So there is some urgency, but there's no need for panic. But if we don't act urgently, then we will be in a panic, right? So that the longer we put this work off, the more expensive and the more chaotic it's going to be. Actually, we can absorb these costs in the economy. If we start early, you get a good assessment, and then you come up with a plan over the course of a couple of decades for how you transition all of that infrastructure and property.
Okay, and a lot of these frameworks are in the Zero Carbon Bill, which you hope to have passed by the middle of the year. Once that is in place, obviously we need to get moving to put these infrastructures in place. What sort of time frame are you working towards in terms of having some sort of a funding model laid down that divvies up costs between central and local government?
Well, we're actually not waiting for the Zero Carbon Bill. So last year, Cabinet approved this nationwide risk assessment and put aside budget to start that work early this year. So that is actually starting in the first quarter of this year. And that work includes looking at the funding model for how we make this. So you've got to remember that we do have time, but we don't have that much time, and it is very, very complex, and some of the numbers are very large. But I think that there's a model out there which appropriately shares risk between private property owners, banks, insurance companies, local government and central government, and does that in a way that doesn't create any moral hazard. Now that's complex and it's worth taking the time to do. And like I said, we've got to do it, but we don't need that tomorrow, right? But what we do need to do is to get started on it.
Okay, what are some of the discussions that you're having with these bodies? What are some models that you are considering? I don't know if you can sort of go into any more detail around that at the moment.
No, I can't at the moment, and in part because when you kind of start throwing possibilities around, people say, oh, well, that's what your plan is, and then they start making decisions accordingly. Actually, we've got to engage with the wider community, with affected communities, with businesses, and as you say, with the insurance and banking industries around this. And those conversations are, let's say, they started last year, but they're still at a fairly early stage. Right?
Okay.
There's a lot of policy work to think through because it is such a complex map.
If we just talk about local government and central government relationship, would you consider setting up a fund and central government putting money into that, and then perhaps local councils applying and saying, look, we need a new seawall for this area, can we apply to the fund? Is that the sort of thing that you might consider?
Well, I'm open to all options, and I'm not committed to any one option. I want to take that work that we're doing this year very methodically, and to see what recommendations it comes back with in terms of how we manage that cost. It is really clear, and I want to make this clear, that local government does not have the resources by itself to be able to absorb these kinds of costs in the time period that we're talking about. So there has to be some kind of solution to that question. But we're not just talking about local government, right? The report today was only talking about local government assets. It wasn't talking about central government assets, it wasn't talking about private property, and all of those things have to be added into the mix. And we've got to look at whether there's one or in fact more models for how you handle each of those domains.
The thing that sort of scares me is that actually the banks and insurance companies will be the ones to sort of call the shots on this before we have a framework in place. And I mean, putting a framework in place is really complicated because it needs support across all parts of the political spectrum. But the concerning thing is that actually insurers will say, no, we're not insuring that property, and then the person needs to default on their mortgage, or that council asset, government asset becomes worthless, that they will call the shots before we have a plan in place. How concerned are you about that?
No, I'm not concerned about that, and
Okay.
that's because we've been engaging with the insurance industry, particular companies, as well as with the Insurance Council. They understand just what a risk this is to the country and to the economy and to householders and communities, and they are acting very responsibly about how we stage this conversation. They're doing that with us, they're doing it with local government, and they're doing it with the banks and so on. So, we are all in this together, and I think they completely understand that. They do have a role to play, and they are thinking about their pricing models and how this is going to go, and obviously that'll affect the eventual outcome. But no, we're working on this together.
Are you concerned though that in the general insurance market it's really concentrated? We have two big players, IAG and Suncorp or Vero, and actually if one of them changed its policies hugely, pulled the pin, that's huge. The market is not is not diverse enough, so that actually increases the risk because it's so concentrated.
Well, you have to understand there are also risks to the insurance companies themselves, and if they made any massive sudden moves that caused a kind of shock in the economy, that would actually blow back on them. It would have an impact on the banks, and it would have an impact on their customers, and that wouldn't work out terribly well for the insurance companies themselves. So they are, in my view, treading through this quite carefully and quite methodically.
Okay, Climate Change Minister James Shaw, thank you so much for joining us, and I'm Janae Tibbs-Shirani from interest.co.nz.